we finally arrived to our topic of equity, and equity is probably the most abstract of the three balance sheet elements between assets, liabilities, and equity, probably because it's the least tangible of the three, and it's a little bit harder to conceptualize. I know the definition is a little ambiguous if you look at like Wikipedia or something, but I've written this little blurb here up at the top, which states that equity is essentially what belongs to the owners. And I should also say it is the residual amount that belongs to the owners, and we'll see what I mean by that as I go on with these illustrations, and we'll just refer back to that. So the first thing I wanted to note is that equity, if you look at equity on a balance sheet, it is separated into two things. The first being retained earnings, which is an account that shows all of the accumulated profits since you started your company. And the second account is common shares, which shows the total amount of ownership in your company. And there are a few other equity accounts, but those are left for intermediate and advanced financial accounting courses. So the first thing I wanted to note is that when equity increases year over year, it's due to one of two things. It can either mean that our common shares are increasing, or we're issuing more shares, or that I guess you could say we're diluting our ownership in the company, because if you issue more shares, there's a lot more shares, and it makes sense diluting. And another way is if you increase retained earnings. So if you're accumulating greater profits, your equity is going up. If your equity is going down, it means that you're repurchasing shares and you're contracting your ownership or your common share base, which means you have less shares in the company. Or it means that you're actually accumulating losses, so retained earnings is going down, and this can cause equity to go down. So I thought I would just cover that really quickly, and I thought a good way to describe what equity is through a little example of a corporation. So let's call this corporation ABC, and we're going to look at like a little balance sheet here. Let's say that they have $4 million of assets. They've got $2 million of liabilities, and they have $2 million of equity. And the way I got this $2 million of equity is because equity is the residual amount of assets, I should say, after you subtract all liabilities. Because if this company were to go bankrupt, we would have to pay back the liabilities first, and then all the leftover assets would be for the owners. So the $2 million is equity, and let's say there are 4 people who actually own this company. So since there are 4 different people, we're going to have 4 equity stakes, and $2 million divided by 4 owners, since they all have an equal ownership, we're assuming that. Their equity stake is worth $500 each. So that's what belongs to each separate owner. Alright, $500,000. Now let's run a scenario. Let's say that assets increase to $5 million, and we will say that liabilities stay the same at $2 million, and our equity, since it is the residual, I can't seem to get my cyan to work. Okay, there we go. Since equity is the residual amount, it is going to be $3 million. And since our equity has now increased and our ownership has not changed, there's still 4 shareholders, that means that we're going to have $3 million, which can be split amongst 4 people. So now each owner has value, or an equity stake worth $750,000. So they have just increased their value and their asset of their shares in this company by $250,000 each. So each of them have just realized this gain. So if they were to sell the company right now, they would pay back the $2 million of loans, and they would each share $750,000. One other scenario is if the company is actually performing horribly and they are about to go bankrupt. In this case, if they have $2 million of assets and $2 million of liabilities, then that means there is going to be 0 residual assets for the shareholders, which means it doesn't matter what percentage stake they have, they're all going to receive $0 for their shares. So that's how equity can change based on assets or liabilities fluctuating, because your equity stake is not a finite fixed sum. It can increase or decrease in value based on the total assets, since equity is just the residual amount, and whatever is left over belongs to the owners. One last thing I wanted to do is just do a quick home buyer example. And let me just change my brush. And let's say I am purchasing a house. If you already understand equity, you can skip this part, but I just wanted to do one more thing, and that is if I am purchasing this house and this is an asset for me, it's worth $400,000, but the thing is I'm not going to be able to pay all of this by myself. So what I'm going to do is I'm going to take on a $200,000 liability, or otherwise known as a mortgage, and the remainder amount I am going to pay out of my pocket. So this is my down payment on the house, and this is what is known as my equity portion, because this is my ownership interest. Because remember that equity is the interest that belongs to the owner. So this is the value that belongs to me. So if I were to immediately sell this house for $400,000, I would pay back the mortgage and I would receive $200,000 because that's what belongs to me as an owner. That is the residual amount after paying back the liability. And if let's say the housing market starts performing well and it goes up, maybe my house is now worth $500,000. Well, because the mortgage is still the same, since it's $200,000, we just subtract that, and my equity will be worth $300,000, and that is the value that I will receive for selling my house. So that's how equity can fluctuate, and that is essentially what equity is. It's the residual amount after liabilities, and it's sometimes called net assets because we always take total assets and subtract total liabilities to get our equity stake. Alright, so hopefully that kind of cleared up what equity is. Make sure to subscribe, and if you have any questions, leave them below. See you guys in the next one.